Hello, everyone, and welcome to another episode of the AI Cash Grain Podcast. Today is June 7th, and I'm Satish Nandapurkar, Director of Data-Driven Strategies for Quantum Hedging. In this week's episode, first Cy will come on and talk about what transpired in the markets this past week, a little bit of divergence. Corn was pretty much unchanged for the week, closing at 467 and a quarter, but beans took another nosedive this week, closed at 1157.75. That was down 26 cents for the week. Cy'll go through his thoughts and his concerns for both markets and what he thinks from a fundamental perspective is driving both markets. Then we'll go to Kevin McNew, who's going to talk about the models and where the models sits. With respect to corn, the models, just a little preview, have a little bit of an uptick in the short term. We were kind of 50-50 in the short term and lower in the long term last week. We're chance of a little higher in the short term, but still bearish long term in corn. With respect to beans, it's kind of the same, 50-50 to the end of June, but 70% higher in August. So the models are bearish corn longer term, a little bit bullish beans longer term right now. And that's reflected sort of in our positioning. I'll come back and talk about our positioning and the recommendations for this week. If you remember last week, we made a pretty big sale in corn. We sold 20%. We recommended a 20% sale. We're now 45% sold in corn at an average price of $470.72. Our benchmark is only 30% sold, so we're 15% oversold at about the same price. This week, we're going to hold with that position. We're going to hold with that oversold position and wait for more data. With respect to beans, we're a little bit oversold. We are now 35% sold in beans at 1178.14. The benchmark's 30% sold, about 3 or 4 cents lower than us, so we're doing a little bit better than the benchmark. And again, we're waiting for data. The recommendation this week is to hold until more data comes in and see where we go from here. With that, I'll turn it over to Cy. Cy, what's going on in these markets?
Kevin, the full-blown weather market here is upon us, and we continue to have two different scenarios unfolding right in front of us. It start off for corn and wheat. It's really the Russian dryness, and they make their crop here in June. And when we look at the forward weather forecast, it's really dry. The numbers I'm getting from our weather guy is 75% chance. The next 10 to 14 days are extremely dry, and they're already disappointing areas. So if that persists, I think your global wheat buyer needs to start getting a little more anxious and stepping up and chasing this a little bit. But as of right now, we have harvest for wheat. The global buyer really hasn't stepped up. I think you're getting out of weak hands. So you might chop around here for a few days, but I think at some point the wheat market has to catch back on fire, and allowing corn to kind of go up with it. The other thing is our weather market going home here Friday. Our weather guy was looking at a dome setting up. Kind of Western Corn Belt would stay wet, but north of I-70, it looks like you're going to be pretty dry and start to get hot. So any dome talk right now, I think, could set the market on fire a little bit. So corn, we got to pay attention to here. There's a real demand market unearthing here, and we got to pay attention to that. I know we're all talking about our big crop, but historically, you change from supply side, i.e. our big crop, to a demand market kind of mid-July to August. My wondering is if we don't start doing that earlier. From a fundamentalist standpoint, you do have some big rallies for wheat in June. So we could get really interesting here in the next couple weeks. For beans, it's a little different. The big thing, I think the dome might keep a bid in beans here for a little bit just to see how that shakes out. But the big thing is the acres. If you do see less corn acres, more bean acres, my goodness, that's just making a burdensome carryout even more burdensome for soybeans. We're really going to need some demand. We just don't see it yet. So it kind of feels like me, and I think the trade, the weak leg will continue to be soybeans versus wheat versus corn. kind of going into that June report. So as of right now, let's watch the weather globally and the weather here and wait for that June report. Kevin, I know I'm a little different than our models. What are you seeing?
Thanks, I appreciate the lead in here. Our models are really a little more bullish after kind of a sharp sell off in the last couple of weeks for beans and 1 week for corn. Although corn, managed to claw back to kind of break even on Friday's close. And so, our corn model is, kind of looking for a little bit of a bounce here, maybe getting us closer to $5. But the overall theme continues to be pretty consistent as it has been for the last several months, which is, maybe a short-term bounce, but overall going into the late fall and early harvest, it just doesn't give us much optimism for significant upside here. And I know people are kind of thinking that, this June acreage report could shake things up. But, as we've looked at that data, there just really isn't a lot there to suggest that. We see very few years where we have any sort of sizable downgrade in the June acreage. If it is a downgrade in June acreage, it's usually pretty small. There are only a couple of years in the past 30 where we've had, call it more than 3%, which right now with some people talking about a 3 million acre drop in acres, that's around a 3% drop. That just is highly unlikely. The 2 years we looked at where we did see that kind of magnitude drop was most recently 2020, which was the COVID year. That was a really anomalous year. It wasn't a slow planting year at all. It was, kind of really kind of crappy prices after the March report. And there were some kind of peculiar things going on with USDA's data. So what was intriguing about that is that the March number in 2020 was 7 million acres higher. It was like a 96, almost 97 million acre number in 2020 in the March report. And they brought it down in June, and then they brought it down in the final number. And so I think 2020 is a really kind of outlier year that we can't compare to because it wasn't even a wet planting year. It was just kind of an anomalous year with USDA. This year we're sitting at 90. That's not a particularly large number. It's not a particularly small number. I don't think the late planting was all that late. It certainly wasn't on par with 2019 or even 1995 when we did see a fairly sharp sell off or sharp drop in acres. So my expectation is they stay about the same, acres stay about the same, maybe a little lower, but probably not enough to really kind of change the overall outlook here. In terms of price expectations, at the end of the month, we do see a little bit of a pop here going into June 30th. But beyond that, pretty much calling for, low to lowish $4 prices beyond that. And so, that's what our model sees today. Again, our model only knows what it knows from its data and its historical perspective. So as new data comes in and things change and evolve, our model will update as well. For beans, it's been a painful couple weeks. Fortunately, we were sellers over these weeks to get us, basically a decent price here, even as we sit at 11.50. So our model is looking for maybe a recovery somewhere back to $12 and overall pretty flat. So just like in the case of corn, I don't expect a huge swing in soybean acres as we head into the June report. And our model right now is pretty much slightly higher to neutral. We don't think there's much in the horizon for the next couple of weeks to really kind of change that outlook as we go into the June 30th report. Price-wise, our price projections are a little bit lower between now and June 30th. Maybe a little bit of strength beyond that, but again, I think we're gonna wait and see where the data lies to kind of give us more direction. We were, making our transactions, making our cash sales at the end of May on beans, and have been making kind of regular sales based on our model projections. So we feel pretty good as we head into the bulk of the growing season. Satish, what are you seeing from your standpoint?
Thanks, Kevin. And before I go into the recommendations section, just quick refresher that the goal of our recommendations is to beat our benchmark index at the end of the year. And our benchmark index for both corn and beans is now 30% sold as we went over the end of May. I did mention before that this week we have a recommendation to hold. in both corn and beans. But let's review where we stand. In corn, we have a bearish stance because we are 45% sold with that big 20% sell at the beginning of the week. The benchmark is only 30% sold. We're oversold. We have a bearish stance because of our models. And we have approximately the same average price, but different percentages. Our average price is 470.72. The benchmark is a touch higher at 470.75. And again, our recommendation is just to hold. We're waiting for more data. Next week, I think, will be a big week. And the end of this month will be a big month for more data where we'll decide what to do with these recommendations. With respect to beans, where we stand is we had a slightly bearish stance. We're 35% sold in beans. The benchmark is 30% sold in beans. We have a slightly better average price. We're about 3.5 cents better. Our average price is 11.7814. The benchmark's at 11.7463. Again, with slightly different percentages. And as I mentioned before, the recommendation is hold. We are in wait and see mode, getting more data into the models before we make any further recommendations for both corn and beans. So with that, let's do a quick recap. And first, we had Cy out there talking about the markets. Corn was unched. Soybeans took another nosedive. Cy's concerns, though, with respect to corn were about Russian wheat situation and maybe providing a bid underneath corn. With soybeans, though, he was a little bit more bearish. With the June acreage report, the traders are looking for more acres to be moved from corn to beans. That'll that makes it hard to be bullish beans. Now, the interesting thing here between Cy and Kevin is the models aren't seeing that yet. So Cy's bullishness in corn and bearishness in beans is not being reflected in the models. The corn models are bearish as of now, and the bean models are actually a tiny bit bullish in the long run, sort of the opposite of that. That actually does not contradict anything. The models are looking for patterns that exist in the data today and saying, based on these patterns, what are the leans? What have we seen historically happen in these markets for corn and soybeans? The models can't predict what the data that's coming out will be. Will Russian wheat weather still continue to be bad? Will the acreage report show a lot of acres moving from corn to beans? The models can't predict that. So the models use what's in the data right now. It's fully data driven and say, based on the data, based on historical patterns, we're leaning bearish corn and maybe slightly bullish beans. But there are concerns out there, and if the data proves out, the models could certainly flip and go the other way. And that's why we don't bet the proverbial farm when we make the recommendations. Yeah, we're a little oversold in corn. And, you know, when it comes to beans, we're just barely oversold in beans, but we're being measured because we know there's more data that's coming out. So again, that's why this week, we're already a bit oversold in corn. We're just going to hold. We're a tiny bit oversold in beans. We're just going to hold because that's what the models are telling us. There's still enough uncertainty. Yes, there's leans, data patterns that we have that give us leans, but there's enough uncertainty that we still need to be cautious about selling too much, even though we're bearish, or, you know, holding and possibly doing an options trade to buy some back, even though we might be a little bullish. But more data is coming out. We're right at inflection points in the market. So, you know, stay tuned because this situation could change quite quickly. And again, thanks very much for being a subscriber. We'll be right back here next week with more data-driven forecasts. We really appreciate you listening and, again, subscribing. Thank you.